Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of May 19th, 2025. Let's get started. SEAF signals for this week. We have technology, that we retain technology and we bringing in industrials and consumer discretionary. Technology looking real strong. We mentioned this a couple of weeks ago that we would be looking for a leader to take this. We had the bottom in early April. We were looking for a leader to kind of take us to the next leg higher if we were going to reverse trend, and technology has stepped up and done that. Overall ranking score of 4, that is one off the top score you can get. We have definitely shed those outflows that were sticking around in the strategic quarter. It will show you a little bit how that's really allowing for the relative performance to kind of rank up there versus SPY. Industrials, relative strong across 3 time periods at a score of 12. Again, taking a look a little bit later at the rainbow charts, we're going to show that industrials is breaking out on a relative basis, and then consumer discretionary showing some real strength in the trading week and tactical month, waiting to kind of shed its strategic quarters outflows with a strategic of 9. But as we can see, if this falls off, we will see consumer discretionary jump up. Will it have the power to jump over technology? I do not know. Seeing a positive momentum move in energy, going from 11 to 8 to 3. I will highlight that a little bit in the rainbow chart, why there's nothing to really do yet for energy. And last but not least, healthcare coming in at the bottom after that brief run up that we had previously. Heading into our heat map. Overall, again, technology showing some real strength. On the trading week, we got a 0.93% increase over the previous week. Again, that's not just a net changing of flows. We got our little algorithm that we calculate the way that the money moves around the 11 sector spiders in case you're trying to do some back of the envelope math. Consumer discretionary coming in at 0.31. That's a pretty strong number 2. And then energy coming in at 0.11, change from last week. That is a nice 3. And again, seeing that positively skewed, but I'll show you why we need a little bit more juice out of energy, maybe, some trailing weeks or some higher numbers in that trading week to get that relative performance to really jump. Healthcare looking bad as of right now, 0.76% outflow. Overall flows have been really strong. We had 4.6% coming into the total 11 sector spiders. I got a chart for you in about a minute to highlight that. 4 of 5 days last week were positive inflows, with Monday leading the pack at a 2.5% increase. Now that is a net increase. We're just calculating the raw numbers to give you a little bit of additional information. Looking at this is one of my favorite charts that I've been looking at lately. This is the total sector spider total AUM. So if you add up all 11 sector spiders, all their AUMs, plot that number onto a chart, that's what we have. And down here, we just have our S&P 500 bar chart. We've really seen a nice acceleration of flows coming into the 11 sector spiders, which really speaks to the confidence that the market has. We're kind of up and away here. In general, when we're trading above this 50-day moving average, we have nice positive price appreciation. Obviously, you can see here we dipped below the 50-day, had a little bit of a pullback, and then we got up above and kind of were off to the races again with little brief interludes on that 50-day moving average. We recently crossed through that about 2 weeks ago, so really seeing some strength overall in the 11 sector spiders, showing some positive price appreciation then in SPY. Heading into our rainbow charts, consumer discretionary. Consumer discretionary looking relatively strong, picking up a little bit on the relative performance side, a little bit of a sideways pattern, but we're kind of starting to creep up here into the lower favored, and with some strong numbers on both the tactical month and trading week. If we can get some sustained flows, I could really see this thing starting to take off. So some positive things looking ahead for consumer discretionary. Industrials, I mentioned, industrials is breaking out in the relative performance side. We have a nice little run up here as we've gone from avoid to neutral to favored. So we have a nice positive relative performance trend, and it is breaking through the relative performance high that we had at late November, early December last year. And then that's a nice positive thing to look into for industrials. So kind of happy to be in this space. Last but not least of our leaders, our technology really hanging up in this upper favored, having a nice relative outperformance trend, starting from really that bottom that we had in the early April and kind of really driving up. We've had some really strong flows, like I said, 0.96 on the trading week, really generating some nice relative outperformance being in technology the last couple of weeks. Energy. Wanted to mention energy. Like I said, we saw that positive skew. I like to highlight that because that tends to be, not a guaranteed precursor, but as we start to see that positive skew, we start to see ourselves come off the bottom. Now, that, like I said, number 3 on the trading week, only a 0.11% inflow for that particular sector, and really haven't seen any movement here on the relative performance side. We will need to see some stronger flows. A couple of weeks, even of just lower numbers, but positive flows can get us up in a little higher relative performance. But we really want to start to see energy creep up into this upper neutral, maybe start to make that turn on the relative performance side. So again, nothing to do on energy, just I like to highlight that positive skew because this is the space that we want to watch, to see if it gets rejected. We did this a little bit last couple of weeks ago where we kind of broke through, went up into neutral, had a little bit of movement, and then came right back down. We need to see sustained flows for a couple of weeks for energy, but watch this space. Last but actually least this week, healthcare. Like to just mention, not only where the money is flowing into, but this model does a very good job of telling you where the money is flowing out to, where to avoid. As you can see here, we've kind of, as we got up into this favored, we picked up some nice relative outperformance in late February and March. That has fallen off the table. Money is flying out of healthcare. Really seeing some negative numbers here, 0.76 outflow on the week, which is significant. That's voting with confidence from our money managers that are investing in the 11 sector spiders. And you can see here relative outperformance is kind of falling through. This is actually a low on the relative performance for the last year, and we've had some bad times here in healthcare. So if you got healthcare in your portfolio, it might be time to take a look. But money is definitely flowing strongly out of healthcare. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.